Hey everyone, welcome back to the channel. If you're new here, my name's Paula. On this channel, we break down what's really happening in crypto, not just the headlines, but the bigger picture behind them, so that you can understand where the market is heading. Now, today, I want to talk about XRP because there's something happening right now that on the surface looks quite bullish, but when you look a bit deeper, it actually raises a much more interesting question. Because XRP has been pushing higher, it's approaching a key level around 155, and a lot of people are starting to talk about a breakout. You'll see analysts saying that if XRP closes above that level, we could be looking at a move towards 190. And from a technical perspective, that makes sense. It's a clear resistance level, it's where liquidity is likely sitting, and it's where a lot of traders are positioned. But at the exact same time that price is moving higher, something else is happening that doesn't quite line up with that bullish narrative. And that is the fact that XRP ETFs are seeing zero inflows. So you've got price rising, but institutions aren't buying. And that is where things start to get interesting. Because most people look at that and think it's a negative signal. They assume that if institutions aren't buying, then something must be wrong. But in reality, that's not necessarily what's happening here. What's actually happening is much more strategic because institutions don't chase price. They don't move in the same way retail does. They don't see something going up and immediately jump in. What they tend to do instead is wait for confirmation. And in this case, that confirmation level appears to be around that 155 mark. So rather than buying into uncertainty, they're waiting for the market to prove itself first. They want to see that level break, they want to see it hold, and only then do they start allocating capital. And that creates a very specific setup because it means the early part of the move is often driven by retail and smaller players. And then once the breakout is confirmed, that's when larger money starts to come in. And when that happens, moves can accelerate very quickly. But this is where we need to zoom out a bit because this isn't just about one price level. This is about how XRP is being positioned more broadly. Because alongside this price action, there are a number of structural things happening that don't always get talked about in the same conversation. But when you connect them, they start to paint a much clearer picture. One of those is the escrow system. Now, a lot of people know that Ripple locked a large portion of XRP into escrow back in 2017, around 55 billion tokens, with roughly 1 billion being released each month. But what often gets missed is what happens after those releases. Because the majority of that XRP doesn't just get dumped into the market, a large percentage of it is actually relocked. And what it does is create a very controlled supply system. Instead of having unpredictable inflation or sudden spikes in supply, the market knows roughly what to expect. And that matters a lot more than people realise, especially when you start thinking about institutional participation. Because institutions don't just look at price, they look at structure, they look at predictability, they look at whether an asset behaves in a way that can be modelled. And XRP, through that escrow system, is actually quite structured in that sense. Then you add another layer on top of that, which is the XRP ledger itself. Because one of the things that's been highlighted more recently is the fact that XRPL doesn't rely on external bridges in the same way that many other blockchain systems do. And that might actually not sound like a big deal at first, but it is. Because if you look at where some of the biggest losses in crypto have come from over the past few years, a huge portion of them have been through cross chain bridge exploits. Billions have been lost through vulnerabilities in those systems. So, when you have a network that doesn't depend on that layer for its core functionality, it reduces a significant amount of risk. And again, that's something that matters a lot more to institutions than it does to retail. Because institutions prioritize security above almost everything else. And then on top of that, you've got ongoing developments like key rotation on the XRP ledger, which allows accounts to update their security keys without needing to create entirely new wallets. Now, again, this isn't the kind of feature that creates hype or headlines, but it's incredibly important from an infrastructure perspective. Because if you're dealing with a large amount of capital, you need flexibility in how you manage security. You need systems that can adapt without creating operational risk. And these are the kinds of features that signal maturity. So when you step back and look at all of this together, what you start to see is that XRP is not being treated as a speculative asset. It's being positioned as infrastructure, and that changes how different participants interact with it. Retail tends to focus on price, breakouts, targets, short term moves. But institutions focus on structure, stability, security, and confirmation. And that's why you can have a situation like this, where price is moving, sentiment is building, but larger capital hasn't fully entered yet. Because from their perspective, the trade hasn't been confirmed. And that brings us back to that key level. Because $1.55 isn't just a technical resistance, it's a decision point. It's the level where the market either proves strength or shows hesitation. If XRP breaks above that level and holds, then the narrative changes. Not just for traders, but for institutions as well. That's when you could start to see inflows increase, momentum build, and the move extend further. But if it fails, if it gets rejected, then what you've got is a classic setup where early buyers get trapped and price rotates back into range. And that is why this moment matters. Because it's not just about whether XRP goes up or down in the short term, it's about whether the conditions are aligning for a larger shift. So when people ask why institutions aren't buying XRP yet, the answer isn't that they're not interested, it's that they're waiting. They're waiting for confirmation, they're waiting for structure, and they're waiting for the market to show that it's ready. Now, I'd really love to know what you think. Do you think XRP breaks above this level and brings institutions in? Or do you think we see another rejection and move back into range? Drop your thoughts in the comments below. And if you want to know the exact strategies we use in the Crypto Wolf Pack to make money in both the bull market and the bear market, we've made a completely free trading course for you. It's called the Crypto Liftoff course, and the link is in the description. If you've enjoyed this video, make sure you like, make sure you subscribe to the channel. Thank you so much for watching, and I'll see you in the next one.